My name is Sally Bruer. I'm the head of research at Tritax. We are the manager of two key listed funds that are focused specifically on the larger distribution warehouse property asset class. Tritax Big Box REIT is focused on the UK market, so all our assets, it's just over 5 years old, just under 30 million square foot of purely big box logistics. Our average unit size is 500,000 square foot for the UK fund. We launched the European fund, which is focused on continental European assets, again big box specifically, and that is now at, now I'm testing myself, it's at about, I think it's at 7 million square foot, and our average unit size is about 900,000 square foot, so purely big box logistics, but with a mindfulness about the appropriateness of the asset class for the users, our tenant customers, and making sure that the assets are the appropriate for what they need, both in terms of specification and location.
Great, thank you. Ingo.
My name is Ingo. I'm the Managing Director for the Northern European region for Gazeley. Gazeley is a company of GLP, and GLP is by far has the most exciting exposure to logistics. We are invested in 55 billion asset under management in logistics. That's me.
Great, Lachlan.
Sure, yeah, Lachlan Macgillivray. I head up retail investments for Colliers International based out of Sydney, Australia, so obviously not a lot to do with the European market, although one of my hobbies, in addition to selling shopping centres, is understanding the global retail themes, in particular online versus physical retail. My team and I have sold about $10 billion worth of shopping centres in Australia over the last 8 years, so obviously knowing what's happening ahead of the curve is very important to our business.
And it's also interesting to get views, I think, from outside of Europe and see how some of those trends are, and the challenges are there, and how they're maybe being dealt with differently, I think. Andy.
Morning everybody, Andy Creighton. I run the direct real estate business for Aberdeen Standard Investments. Overall, we've got about 43 billion sterling under management. 13 billion of that is continental Europe and the Nordics. And interesting, when we're talking about residential, and I was surprised when I heard this number. We manage over 7 billion euros of resi across Europe. So that's our dominant investor set, if you like. But otherwise, we are right across the board. We've also launched a European logistics trust, which is listed on the UK exchange. We haven't done that with a retail product as yet, or recently. So perhaps that shows the trend. But we've also found it very difficult to identify value in that, and that's when we're looking at this purely from an investor perspective, rather than an occupier perspective. That's where we're finding real challenges in the logistics sector, and maybe there's going to be some more interesting opportunities in retail.
Okay, good. Bill.
Thanks, Richard. I'm Bill Kistler. I think I'm the token American in the room, but I tell everybody these days I'm Canadian. But I have lived in Europe 30 years, so I'm a reformed American. I run the ICSC. I'm managing director of ICSC, the International Council of Shopping Centers. But don't be fooled by the name. We're about all physical retail and the ecosystem of stakeholders, whether investors, advisors, developers, owners, managers in the retail world. We have 70,000 members around the world, 7,000 in Europe through a federation of national entities.
Okay, great. So we've got retail, logistics, and retail and logistics with Andy, who's is the judge in that sense.
So good.
Good. Let's kick off with the retail sector. Obviously, huge amounts of capital have been pouring in. Sally, you're on the research side, so what are you seeing as some of the sort of key trends that you think are driving that?
Well, speaking about retail, but also linking it back, of course, to our asset class. Retail appears to be undergoing somewhat of a change in terms of the way in which it responds to the customer, and rather than being sort of property or shop or space led. It's being led by what the consumer is actually demanding, and part of that is the online response and what the consumer is wanting and how they want that delivered, and then therefore having the appropriate infrastructure to be able to deliver that metaphorically and physically deliver the product to where the customer wants it to be. And also the way in which the shopping experience is responding. So the not polarization, but the tension between task-based shopping, stuff that we all need to function and survive, versus the experience-based shopping and the way in which the consumer wants to interact with the leisure that they take from shopping and the experience that they have within the spaces where they're shopping. So finding the right combination of what the consumer wants, both in terms of physical space and places to experience shopping, or convenience of shopping, and how they want that delivered in terms of physical experience versus what they want conveniently. And the response to that in terms of logistics is being able to make sure that we deliver what the customer wants. The customer wants convenience. They want choice. They want to have it all at the price that they're prepared to pay. They don't necessarily want to pay the cheapest price every time, but they want the convenience to choose and make the choice exactly for them, what and where they're prepared to pay, and where they have their product delivered. So responding to all of that is a big challenge. Part of that response is logistics, and part of it is a combination of urban logistics, big box logistics, modern facilities, appropriately located facilities with the right specification, and I'll let the retail specialists talk about what that means in terms of retail space. But it's making sure that we deliver what the customer needs, because fundamentally, if we get it wrong for them, we won't be getting it right for the users of our logistics space or retail space.
Okay, so let's pick up that invitation from Sally.
Absolutely.
Lachlan, I mean, also, if you could just maybe give us just an idea of what's happening at the moment in terms of your markets in Australia, and also just pick up that point about what the customer wants.
Sure, okay. So look, I think in Australia, the best analogy I can give is that we seem to have caught a cold sentiment-wise from the US and the UK. So a lot of investors in Australia are worried about what's happened in the US and UK and saying, well, we're probably, generally 5 years behind in terms of adaptation, etc. So the Australian market is going to be experiencing really what the US and UK are experiencing now in a few years' time. But I think there are fundamental differences. So the first thing that I did when Amazon was mentioned was go over to the US and UK and actually see what's happening on the ground there and work out how Australia can be prepared defensively from that wonderful A word. And I guess what I saw was it comes down, and Sally touched on it, giving the customers what they need. So our shopping centres are pretty differently positioned to US and UK centres. They're generally right in the middle of big population centres. They're not in out-of-town locations, and they're fundamentally anchored by supermarkets. So our average visitation in our major shopping centres that do, say, £1 billion equivalent in turnover would be at least once a week. That equivalent centre in the US or UK is probably every 2 to 3 weeks, from what I understand. They're very destinational, limited supermarkets, but anchored by department stores. We've had the leisure in our centres for a long time. So gymnasiums have been part of our shopping centres for the last 10, 15, 20 years. Apparel's definitely been right-sized, and food and beverage has really been increased, and that's something that we first saw in Asia. From a big trend piece in Singapore and Hong Kong in particular. So I think it's all about when you've got another alternative, and that is buying something online. One of those elements is speed to delivery, and in Australia that's another challenge. We don't have the infrastructure in place to get the same delivery timeframes that the US and UK have, and obviously it's a lot easier. 95% of households have probably at least one car in Australia and go to their major shopping centre via car. So the habits are different from that end, but it's about delivering a product that people ultimately want. You look at the luxury brands, it doesn't matter where you are, they're all thriving. They've got a unique aspirational product, they deliver a good service, and people are still prepared to pay to get that, and those brands don't discount. And what I think we've seen is fundamentally everyone's fixated on the physical landscape changing, but it starts with the retailer. And a lot of retailers haven't reinvested in their business plans for a very long time. They've been doing it the same way for the last 40 to 50 years. I personally think logistics is very exciting, enhancing the retail proposition, strategy, etc. Because you look at the amount of stock that these retailers have to get rid of or discount, etc. It's a huge amount, and it has a major impact on profit. If they get that logistics supply chain equation right, enhanced with online and in store, they've got an ability to be far more profitable, I believe. So I think it's all coexistence.
So can I just interject quickly,
Yes,
if you don't mind?
very much allowed.
Kevin Moffat from Savills, head of logistics research for Savills. Just a quick question on Australia. Amazon launched to much fanfare in Australia maybe about 2 years ago now. What impact have they had? Are people using Amazon? And the other question is more related to retail. One of the big impacts I think of Amazon in the UK and Europe has been the knock-on effect to other retailers to innovate. Has that happened in Australia?
Yeah, really good. So a couple of good questions there. I think firstly, I've never shopped on Amazon. Just you have to wait 2 days to get it, and I can get to my local shopping centre within a much quicker time frame. So I think that's the first thing. Others do, but in terms of how the fanfare and the adaptation, within probably 6 months of launching, they dropped their membership fee by 50% because it wasn't getting the uptake that they wanted. So I think ultimately you're not driving 30 to 60 minutes to get to your big out-of-town centre in Australia. You're able to get there in 15 to 20 minutes, typically tops. So we haven't seen, I don't believe, anywhere near the take-up, and Amazon are pretty quiet on the numbers in terms of Australia. They're still getting their distribution channels right. But yeah, you're right, the evolution, companies like eBay and others have definitely had an impact. The pure online retailers, they've absolutely crushed them from that end, but we haven't seen a big drop-off in sales. Probably our biggest challenge for retail sentiments, what a wonderful government continues to do, and that is, we don't have Brexit, but they've got the merry-go-round of prime ministers happening at the moment. So
it's really interesting. Just to, again, there's some research came out last week in the UK now. There's 15 million Amazon Prime subscriptions. And I worked out that's 1.2 billion pounds worth of income in the UK before you've even sold the product. So it's and this might be a question for the retail guys. Is why are more retailers, more existing retailers, not going for that subscription model if you can get 1.1 billion pounds worth of income before you've even sold a product? Question for Bill, maybe.
Well, I think the subscription to Amazon gets you a lot more than just faster delivery. It gets you access to Amazon Prime. It gets you a whole ecosystem of services, and most retailers can't offer that. They don't have as broad. And I know the folks who know Amazon better than I do. And I'm a subscriber. I'm one of those 15 million or whatever. And it's not because we shop and get slightly faster delivery and maybe a little bit of a discount. It's because we get Amazon Prime and other things through that.
Maybe I can inject in here. We from Gazeley in Germany, we are the #1 developer for Amazon. We have delivered in the last 36 months up to 500,000 square meters in e-fulfillment center, in sorter center and last mile logistics center for Amazon. And what is the advantage of Amazon against other retailers is that you get anything on this web page. Jeff Bezos has the clear message out of the market that you can get even a Bentley, even a Mini, a BMW, whatever you want from Amazon. And that is the big advantage. We thought in the German retail scenery, we developed for Adidas 5 or 6 years ago an e-fulfillment center as well, because they would like to shift all the movements that is in Amazon to the Adidas web page. When you would like to have a t-shirt, not a Reebok t-shirt or a Puma t-shirt, they would like to have an Adidas t-shirt. But to our understanding, this war is already lost, and Amazon has won this war in any aspect. And I think we see Amazon not as a rival to retail. It's something like a new retail type, and anybody has to look from retail scenery that they have that kind of stuff as well, an omni-channel strategy. Or why not plugging into the Amazon ecosystem and take advantage of it? That is our view. For sure, we are a logistic developer.
Are you actively seeking Amazon as a member of the ICSC, Bill? On
we
that
can,
basis?
Yes, we just so we can throw stones at them on stage. and I'm sorry, I have to disagree with Ingo. I mean, I think they are a serious threat to physical retail, I think. And beyond that, and I'll go a little philosophical here, I warned Sally already that I was going to be a bit provocative. I think the whole model in Amazon is obviously the top of the food chain, and the physical distribution real estate sector supports that. Much like a drug dealer enables drug addicts. So you can shop, you can benefit from the convenience on your iPad, and you can benefit from the quick delivery thanks to the logistics sector. But the end of that is an impact not just on physical retail, but on communities. Because the jobs that the places you build are generally out of town in big warehouses. They're not creating the kind of social community that place-based retail, community retail creates. They don't have the mix of use that great cities offer. So I think there's a much more policy-oriented discussion to be had around the impact long-term of Amazon, and then the enabling logistics sector for the Amazons of the world. And by the way, most e-commerce, including Amazon, have an unfair advantage from a regulatory perspective because they're not paying the same rates. They're not so. I think physical retail has been at a disadvantage, and I think you're going to see a pushback coming. Amazon is able to invest, I think, last year $22 billion in research. I don't think the entire physical retail real estate world invested close to that amount in thinking about their future. So it is a battle for the future. Yes, there's the evolution towards omnichannel and click and collect and all these other things which will help sustain, showcase retail environments, but I think there's a real challenge ahead.
Just
a
couple of questions, observations. One, a brief for Andrew. I think there's a bit of naivety in terms of what really is happening is you're an owner of shopping centres, and I think that over a period of time you've probably built a portfolio of them, and not just you as an institution, but lots of institutions just sort of like put them in a drawer and they are what they are. What logistics is actually doing is having you now have to rethink retail, and that means spending a lot of money to rethink retail. Leases get shorter, you move to turnover, and guess what, your valuation starts to also change. So I think you've got a lot of challenges in being an owner of physical big shopping centres. And the other observation is that no one's mentioned Alibaba and how they are going to be competing in the European markets. I just read in the paper today about how many parcels were delivered in China last year, and anyone got any idea?
20 billion?
50 billion. And just think about that. And they're doing a vertical integration of their business. They're owning the delivery companies. And I think that they will have, and you might know more about this than I do, both of you in logistics, is what's their plans for the European market. So one Andrew, sorry, I'd be really interested to hear your comments on how you can actually get more capex into shopping centres, because it's a big programme, and leases, turnovers, they're just, it's no longer 6%, 5%. They're getting absolutely caned. Sorry to focus on you.
I don't deal with the UK, but the UK, when you look at some of the big shopping centres that we have in our portfolio, we have a shopping centre fund, which includes things like, for those that know, Brent Cross, which we have as a joint venture with Hammerson, the shopping centre in Wimbledon, the big 400 million shopping centre in Brighton. These are big chunks of real estate, and the value and the over-rentedness in these shopping centres is scary, and it's a topic for another day in terms of the redevelopment of Brent Cross, which is a billion sterling shopping centre, and how that is going to recreate and redevelop itself. Because as you rightly say, the challenge is huge, because the underlying value is preventing, and the rents that retailers are prepared to pay almost prevents the owners of these things to get a return on that investment to make things happen. So there's an entire, and this will be a question for you probably more than me, but how do we change these shopping centres in the UK? I think it is less of a problem on the continent, because I think the nature of the shopping experience over there or over here I should say, is slightly different. And it is about it becoming a centre of leisure activity, and maybe it's a comment that you could make, rather than purely going there to buy physical goods. It's going and spending leisure time.
But if you then remodel that and bring in more food and beverage and things like that, these guys aren't going to sign, that 25-year lease. They're undermining the valuation of the centre.
Yeah.
Not because what you're doing is wrong. It's just that the whole setup was wrong day one. Being anchored by department stores, they died 20 years ago, right? And that's why I like the idea of grocery anchoring Australia, because that's a reason to go there.
Yeah.
But all those leases, look at what works well. Turnover leases work very well. Look at Value Retail, Vista Village. It's all turnover leases.
Yeah.
They got that model right because they were late to the game. Unfortunately, the institutional market still likes 20-year leases.
No, I'm not so sure that's the case, actually. I'm not bothered about long leases. I'm after durable leases.
You've got to then get their mind around.
That's changing. The years of 20, the classical UK 25-year lease, that disappeared an awful long time ago. We purely look at income on the basis of its durability, not its length. And what I mean by that is the ability to grow that rent, but also to ensure that what we're providing in whatever asset class that we're talking about is what tenants want, whether that's a logistics unit, a residential unit, or a retail unit. So actually, the length of lease for me isn't the be all and end all. I haven't answered your question in terms of how the hell we deal with the issue of big shopping centres in the UK and the capital expenditure, apart from the fact that they have to change. That is going to come probably led by valuation decline, which is going to force us to do that. Because if and that at least because the UK valuers do value mark to market to a greater extent than here on the continent, that will force the issue to a much greater extent.
I'd love to jump in and throw something question-wise or response-wise back, but I shouldn't say throw it, but pass it back. But we've seen this in Australia, and one particular case study was a department store doing $30 million over 3 levels that closed in one of our Westfield assets in metropolitan Sydney, and basically Westfield exited that particular tenant. It was Myer, which is one of our 2 big department store brands. They ended up repurposing that space and ended up turning that $30 million turnover into $150 million. And that is the big opportunity, I think, for a lot of these big shopping centres. It's repurposing that space. You talk about length of lease, those covenants, they're not the covenants that they once were. So the 20-year lease to, a lot of those retailers, you kind of go, do you really want that, or would you rather spread the risk a bit? Yeah. So I think that's an opportunity. But again, it gets back to driving footfall. What we're starting to see now, so it's carving up that space, bringing in mini majors who go from paying, 100, or I'll try and talk square feet, so $15 to $20 a square foot. They're paying more than double that for much smaller portions of space. They're doing much higher turnover. They're bringing new customers to the centre that weren't coming previously, and then we're introducing more food. And we've basically seen food going from being about 10 to 15% of lettable area up to 30 to 40%. And it's all about driving repeat visitations. We're now starting to see hospitals which are being brought into the mix, so that's really interesting. And that's no one likes visiting a hospital, but it is the most reliable sort of social infrastructure you can get, and then talking
Even
to
if
one
the
of
food and beverage is awful. that may help.
exactly. So it drives people out, and then and one of my esteemed colleagues from South Africa was telling me that they're repurposing shopping centres into schools. So they're actually bringing schools into part of a shopping centre. So I think fundamentally, if you've got great real estate, there's an opportunity for flexibility, for reinvention. And I actually think retail's never been more exciting than what it is now. Yeah, we've got a couple of headwinds, probably more than a couple, but it's an opportunity for the industry to reinvent itself. And they do it better in Asia than anywhere else because they've got land constraints. And you look at some of those multi-purpose developments there that have got hotel, office, residential, hospital, university. That's another big one that we're seeing. University students, in particular international ones, they spend a lot of money. So, yeah.
And what about Alibaba? Sorry, that was just a question. Anybody comments on what they might do?
We certainly know that they are interested in entering the UK. I think they probably have similar aspirations in Europe. They have decided to make a few toe dipping. They've taken a few toe dipping activities, like they've taken some space either through their third party logistics providers, but as yet haven't dived straight in. But I think there is an aspiration. They can see the growth opportunity. They have been able to innovate in Asia and bring new things to a particularly active market, but how much the impact they will, how soon their plans are likely to come, or how much impact they will have in a fairly diverse and exciting market in Europe anyway. I mean, there is such a great deal that's going on in European logistics and online, that how they will contribute to that will remain to be seen. How they'll flex their model for the European story will still be a question to be answered.
Yes, we see a lot of rumors about that Alibaba is now coming to town, especially to the European continent. And Alibaba, I think we are really looking forward as a developer that Alibaba is coming to town, because as we all know, Amazon need a competitor. No?
Yeah.
And for that reason, they have now settled in the area of Brussels. They bought a site, something like that. They have a different business model like Amazon. If you compare that, Amazon is something like what we see a little bit with concerns. They are real estate guys now. No? They hire a lot of people in real estate, and they would like to be a developer as well. No? Because they see what kind of NOI they are producing, they see the cap rates, and they see the construction costs. They have always they would like to have totally transparency about total development costs. No? You need to be, if you would like to be with Amazon, you need to be absolutely open-minded for open book procedure, GMP pricing, what we on the continent do not that like. If you come to a German pub, you would like to drink a beer, no? You don't get a price. What is the price for water or for optional malts? No? That is our secret in that case. Alibaba is in China much more bigger than Amazon. Alibaba has, I think, a market share the same like Amazon has here in Europe. And you may have heard about the single day in November, no? Where they make turnover, I think, within 24 hours of 70 billion US dollar, whatever the currency is there. And that means, translated, about 750 million of parcels they sent out within 48 hours. If you look at the German parcel market at all, it's 3.2 billion. So you see, there are more or less 20% in one day. And this kind of business is coming over now to Europe. Alibaba is different. It's not real estate type driven. They are in that supply chain software, no? So you can plug into the Alibaba system. No? So it might be a very smart thing to do. No? We will see. For us as a developer, always good. More competition, more. It gets tight. You need to be a landlord, and then you can make your returns.
More sheds.
More sheds, no? Shed masters as we are.
That's what you were getting to, wasn't it?
Yes, absolutely.
Can I make a point responding back to talking around the store and the shopping centre? Because I think actually us being on two, rather than being versus, I think there is actually sort of something being lost, which is the fact that logistics provides servicing. The majority of sales are still done in stores. So logistics is servicing not just the online customer delivering to home or to a locker or to a parcel store or whatever, but the majority of the goods are still going to stores. And the majority of the stores still need to be provided their products through a logistics network. So the fact that there is a shifting dynamic in retail doesn't change the fact that there still has to be good service from the logistics and the supply chain through the properties, through the logistics assets, along the network, the transport networks, to the right places at the right time. And the changing role of, or the consumer driving some of these changes also means that the logistics supply and the supply chain is responding, and the physical infrastructure of the properties and the vehicles and whatever, but also the store. And the role of the store is evolving. So the store is not just a place for people to come and buy, they're a place for people to come and experience and to showroom and feel and touch the product. They may choose to buy it through a different channel. They may also choose to click and collect and use or the store and the retailer may choose to use their stores as quasi logistics platforms, so distributing product directly from store out to the consumer, which in its own way is a sustainable form of distribution because the store is located closer to the consumer. So the retailers and the way they're using their stores, as well as the logistics response to that and the way they're using their logistics properties and their logistics providers, is all evolving around the response to the consumer. But it doesn't mean it's one or the other, it's a combination of all of them together to ensure that everything functions well and delivers what the customer wants and needs.
And is this just a rebalancing of something that we've seen before? I mean, before, obviously, the internet, as I remember it, plenty of people bought things off catalogues. You had a massive book which had all kinds of things in, not quite from a Bentley to everything, but had everything in, and you accepted that you had to wait 4 weeks for it or whatever it was, but it would eventually come. And 4 weeks didn't seem that long. That was okay. Or before that, you also then had delivery by bike. Your local shop would send it to you. That's what would happen. You wouldn't necessarily take it home because you didn't have a car. Then when you had a car, obviously shopping centres came into their own because you could actually pick it up yourself and take it with you. So is this a rebalancing is one thing, and also then do we think it's not so dissimilar to what's happened with WeWork in offices, that actually this is about servicing the customer, and if retail can also put in food anchors, I think is interesting, and leisure anchors, then there's no reason why the European shopping centres can't be like the ones Lachlan's talking about there in Australia.
Can I just make a comment on that? I mean, the world, is ever changing, but the scary thing, and the more I hear some of the views around the table from an investment perspective, it makes our job trying to invest clients' money even harder because the world is changing at an ever increasing speed. And I think the one thing, and I'm sorry because this gets back to really boring real estate fundamentals, the mega trend of urbanization is overriding all of that, and as more and more people want to live in urban environments, and you talk about people having more cars. Well, people are now having fewer cars. They don't want to have cars in urban environments. They want everything close at hand. So not only does that lead us towards wanting to invest more in residential, but also in the built environment in urban centres, because that, investing in urban land plays, as we call it, is probably the safest way that we're going to invest clients' money. But it's really hard to look into the future and see. I mean, I think where we've always talked about A for Amazon. I think the Alibaba, it'll be A for Alibaba. If we're sitting here in 5 years' time, it'll be a completely different debate.
Just 2 quick points. I think that's really the right way to look at it. I'm not even sure we can continue to use the word retail, let alone shopping center, because there's a fusion going on. And Sally, that was a a perfect response to my provocation, but I do think we have to think about the kind of collective, what we call retail, which is food and beverage and leisure and lots of other stuff, as the catalyst, as an asset class. We've siloed real estate and property into resi and office and all these different things, and we see them coming together again. And you look at things like Westfield in Stratford and Westfield London, the value creation around the shopping center of resi development, of office development, in what was brownfield land is extraordinary. And the more investors and the more developers can begin to think about it holistically as what a retail, quote, project can do to lift not just the surrounding area, but in fact an entire city. I think the more retail will prosper and be seen as a valuable part of the property ecosystem.
Okay, good. I've got one last question, which is just in terms of investment strategies, and that picks up what you were saying there. What do we think is likely to be successful over, let's say, the short to medium term? Because I'm interested also in the fact that if what you're saying is right and that retail is going down, does that actually then make that an opportunity? So just a quick last one.
Me?
Well, we can start with you. You can all have 30 seconds each.
I thought I was a judge. I thought I could go last. I could just pick up what everybody else is saying. I mean, I said at the outset, you know, I love it when one of our fund managers comes to our investment committee with a retail opportunity, because they have to have conviction, and you know, they probably get a tougher time now than somebody who's bringing a logistics unit to our investment committee. It seems an easier decision to make, but the trouble is, you know, we're trying to find value in all of these investments, and with yields in logistics shed and, dare I say, big box logistics in windy field locations or out on motorway networks. You know, that might, as I say, the speed of change is so dramatic that is that going to be the right size shed in the right logistics chain in 5 years' time? Hard to see. So it might be an easier investment decision today, but the yields are getting tighter and tighter. You know, we like to buy investments that we hold for a long time, not so much these shopping centre things that we were talking about earlier. We don't just put them in a cupboard and leave them. I'd like to think we actively manage all of these things. But it is the cost of buying real estate and selling real estate and recycling the capital. You know, we don't want to be churning these things quickly. So it's a really tough ask. We still like all the asset classes. They're changing at different phases in the cycle. If I had to pick one, I'm afraid I'm going to have to say residential.
Controversial. Okay, good. Although there is beds and sheds and beds and retail, so that's an interesting. Lachlan.
Yeah, I'd say, look, I'm biased towards retail. It's the asset class I know, so I would say retail, but it's got to be well located. It's got to have an element of dominance, and to take Andy's lead, something that you can incorporate some mixed-use residential into, because if you're able to do that, it means you've got underlying land value, and that's a back solve against everything. So I think people, you know, the big opportunity, I think, in the retail space, some of these retail assets are sitting on fundamentally fantastic sites, very, very valuable, and there's an opportunity to enhance them further if you buy the right ones.
Ingo.
Yes, I'm absolutely with Andrew. I think even in logistics, it's all about location. It's quite simple. If you look at location-wise, where we would like to be invested is Gazeley and GLP, that is mainly, as already outlined in your research piece, that is the Benelux, this is Germany and maybe the Nordics, no? And then you need to look at port area, for example, from Rotterdam to the Rhine-Ruhr area, what we call global hubs. And then a standard box, a last mile logistic box, an e-fulfillment center. An e-fulfillment center, you can invest a lot of money of it. We are speaking about asset under management on a big e-fulfillment center, about €250 million, no? Based on 20 years lease agreements with great occupiers. So I think this asset class logistic, I think from an investor point of view, is definitely an asset class you should look at. No?
Don't worry, we are. And we've bought more logistics than any other asset class other than resi in the last 5 years.
Good, Sally.
Well, I'm obviously going to say logistics, but it is about location, but it's also about specification and the right provision for the users of our space. And we call them occupiers, but actually what they're doing is using the space. So making sure that the space is appropriately located, specified and connected. So both in terms of transport, power, data, which as the infrastructure going inside these buildings is so hugely dependent on the information flow and the power flow to be able to make them work efficiently, that is core to choosing the right assets, and dialogue with the occupiers, with the users, to ensure that the space is remaining appropriate over the life of the lease, the hold for the investor, to ensure that the income on the assets is strong and stable. Sorry, it's a bad choice of phrase. It's strong and maintainable. But and in terms of location, it's not, windy fields might not be right for everyone. They might be right for exactly the type of occupier who you're contracting to take that space. Similarly, on the urban logistics side, it's the right type of space in the right location. That could be micro, as Damien's chart was showing. It could be big box, and we're actively acquiring assets and land in locations to be able to ensure that we're providing what the users of the space require to ensure that they have well-functioning logistics assets, and we have a sustainable, long, capable income stream from those assets.
That's great, thank you.